We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelming on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Bill Holter. He's a precious metals broker and is partnered with Jim Sinclair over at JSMineset.com. How are you today, Bill?
Good. Thanks for having me, Tom.
Excellent to have you back. Of course, it's been a little while, so we're looking forward to really dig into some of the new happenings here. And I've heard you say before that the credit markets are the smartest and most intelligent markets in the world, and they're smarter than the equity markets. So what are the credit markets telling us right now about the state of the world?
Well, obviously, you've seen interest rates move up significantly this year. Obviously, they're looking at inflation, and the credit markets started moving higher yields, lower prices, long before any of the central banks started to tighten. As of the last 2 or 3 weeks, you've seen yields pull back, coming down, and I think that's the credit markets looking forward at much, much slower growth. I do think that you'll see at some point in time, this is going to be a credit/currency market, panic, chaos, whatever you want to call it. I do believe the credit markets are at some point in time going to again place risk premium on the credits that are most risky. And right now I'm talking about sovereigns, but for instance, there are no bids for Italian debt other than the ECB. If you look at different sovereigns across Europe, they're relatively tight, and there hasn't been risk premium in yields since before 2008. And that's because what central banks did, they came in and basically rescued credit markets and then through manipulative fashion set rates far lower than they should have been for far longer. I mean, we've been on life support now since 2008, and the central banks are saying that, they are raising rates, but for instance, the Fed says that they're going to shrink their balance sheet, and that was supposed to have started last month, and guess what? Their balance sheet didn't shrink. And the reason being, who are they going to sell? If they're going to shrink their balance sheet, they've got to sell assets. Who's going to buy the assets? Mm-hmm. So I think what you're going to see in the credit markets at some point in time, and not in the too distant future, I do believe that bond yields are going to begin to put a risk premium on yields, which we haven't had in, like I said, 14 years.
Mm-hmm. As you're saying that there's no real bid for Italian debt other than the ECB, does that start to create a lot of instability within the Eurozone?
Well, yeah, it does, because what the ECB is being forced to do, they're being forced to sell better bonds, like they're being forced to sell German bonds in order to buy Italian bonds. So now you're flattening yields between a good credit and a bad credit. And that over time is, it won't work. Mm-hmm. What's going to happen is the problems that have been created are now larger than the central banks collectively. And like I said, I think you are going to see a credit crisis, and that's going to bleed over into currencies. Currencies are credit-based across the entire globe. All of the fiat currencies are credit-based. So once credit starts to collapse, then you're going to see currencies collapse. And what does that mean? It means you need more and more and more currency to buy a cup of coffee or an ounce of gold or a gallon of gas or whatever. Mm-hmm. That turns into hyperinflation. Now, if we actually had real currencies like we did back in the 1920s and 30s, you could have credit collapse, but currencies not collapse. That's not the case today. If credit collapses, so do the currencies.
And that's really just like a loss of faith in that currency, right?
Right. Yeah, because think about this. If the credit of a nation is collapsing, then so does their currency. Well, back in the old days, you could have debt non-payment, and that would lead to outright deflation because you'd be collapsing the money supply, and that money supply was backed by X amount of gold. Mm-hmm. Whereas today it's backed by X amount of nothing other than pure faith and confidence.
Mm-hmm. So, Bill, every time the Fed has raised rates in the past, we've seen something break. So do you think we could wake up one morning to the credit markets being seized up? And is this the most likely place that we see a break this time because of these unprecedented debt levels?
I don't necessarily think it will be the U.S. Treasury market to start. I mean, that'll be the final domino to go. What you're seeing now is that real estate is already topped. I mean, look at real estate in China. That was a huge real estate bubble. Prices have now turned around and gone backwards. And what do you have over there? You've got people saying collectively, we're not paying our mortgages. So yes, you're absolutely right. Every time since 1982 that the Fed tried to raise interest rates, 1987, 1994, 98, 2000 with the .com, 2007-8 with real estate and MBS, again in 2018, and here we are again. They're trying to raise rates, but each time that they've tried to raise rates, you're right, they've broken something, but it gets bigger and bigger each time because the debt outstanding is larger and larger. So when they raise rates, what it's doing is it's exposing, if you will, bad debt,
right,
or weak debt, whatever you want.
Mm-hmm. So does this also affect the velocity of money, or does velocity really even matter anymore?
Well, yeah, actually, if you look at a chart of velocity, it's just now starting to turn higher after, 20, 25 years of pretty steady decline. And the fact that velocity is starting to turn higher tells me that you've got some people looking at cash or the currencies as a hot potato. They're trying to spend their capital now before prices are higher. And I think also the supply chains that have been damaged and broken, that's part of the psychology. That's part of, and I know I do this myself. If I need something, I'll buy 2 or I'll buy 3. And I've actually gone and made a list and bought stuff that I think I'm going to need in the next year, 2 years, 3 years, because frankly, I don't know if I'm going to be able to get it. So that's a perfect example of velocity. In other words, spending your capital, thinking of it as a hot potato, you want to get rid of it now.
Mm-hmm. And moving that time preference up, right?
Right, exactly. Well, buying something when you can buy it. You don't know if you're going to be able to buy it later. And if you do buy it later, you pretty much can rest assured that it's going to cost more. Mm-hmm. So this is it's not just nuts and bolts mathematics. There is human emotion involved in this. And once you get a herd expecting higher inflation, they're going to spend their currency. Mm-hmm. And velocity will turn higher. And that's what's happening.
So, to that point, Bill, when we hear the White House redefine the meaning of the term recession and add that most people think that the Fed is underreporting the true inflation numbers, is this really exacerbating the ultimate problem that we will be facing instead of truthfully analyzing, where we actually are, what the situation actually is?
Well, it undermines confidence because, you can call a duck anything you want to call it. But if you look at it and you know it's a duck, then whoever's defining it as a door or a broom or whatever, they're full of crap. And that's where we are now. The system runs on confidence, and every single day, the powers that be are lessening the confidence that the public has in them. I mean, it's gotten so ridiculous. You've got a Supreme Court justice now who is a woman who could not define what a woman is. And I mean, the average person in the United States is not a freaked out snowflake, is nodding their head going, yeah, that's right. The average American at this point has got to look at what's going on and the lies. The lies have gotten so big, the average person can see it and they're looking at it and going, you're full of shit. And that's where we are. We're at that point in time where confidence is really starting to shake.
Mm-hmm.
And fiat money runs on confidence.
Mm-hmm. And, you know, over the weekend, it was reported that the Senate passed a $750 billion Inflation Reduction Act. And, you know, when we add that up with an $839 billion National Defense Authorization Act and another $280 billion chip manufacturing bill, I think we could make the argument that some of those things are necessary. However, when we think about that amount of spending, how is the US ever going to be able to actually try to get a handle on inflation?
I don't think this has anything to do with getting a handle on inflation. It's my opinion that this is a purposeful destruction of the United States. I mean, think back to 2008. 2008, congressmen were told that if they didn't pass the $700 billion TARP Act, that everything was going to collapse. And at that point in time, $700 billion, I mean, people were out of their minds thinking from a fiscal standpoint, $700 billion. I mean, we're doing just those three you put together are what, like 1.2, 1.4 trillion? And nobody's even batting an eye. It can't be paid back. It'll never be paid back. It just adds to the debt that's not payable, and it speeds up the collapse. So, you know, they call it the Inflation Reduction Act. They could call it whatever they want. It has nothing to do with reducing inflation, and it will speed the decline and collapse of the purchasing power of the dollar.
So is it possible that they just don't understand, you know, the source or the cause of inflation, or you think it is?
No.
It is intentional.
It's not possible. This is intentional, in my opinion. Now, yeah, you're going to have some senators and congressmen who don't have a clue, but the ones who are pulling the strings know exactly what they're doing. And this is the purposeful destruction of the United States by the WEF, Klaus Schwab. I mean, George Soros, what was it, 1992, 93, something like that? He broke the Bank of England. And I'm sure he's short US dollars in a huge way. And I'm sure he's long gold and silver in a long way.
Interesting. Why do you think he's long gold and silver in a large way?
Because if you're long gold or you're long silver, you're short the dollar. I mean, they are 180-degree opposites of the dollar. Mm-hmm. Gold is the anti-dollar. Gold is the anti-fiat. So if you expect a currency to collapse, then you take that currency and you buy gold with it because it cannot default. That's the reason to buy gold and silver or to own gold and silver, is because they cannot default. They cannot bankrupt. You cannot wake up tomorrow morning and find out, oh, my 1 ounce gold coin is worthless. Mm-hmm. But that can happen with any piece of paper anywhere on the planet. All paper assets have liability attached to them. They are someone else's liability. So in other words, for you to get paid, someone else has to perform. But that's not the case with gold and silver. And those are the only two monies on the planet that have that trait.
So to your point, Bill, in this time of rising rates, we've seen several currencies gain relative value over others. So can you contrast for us maybe the rise of the ruble against the dollar and also the rise of the dollar against the basket of currencies that it's measured against for those that might not understand that difference?
Yeah, you're talking about the USDX, and the dollar has risen versus other currencies. And the reason for that is because many trade contracts, many contracts were done in dollars. And the reason they were done in dollars because you had such low rates in the US versus use Italy, for example. If you were in an area where interest rates were much higher than they were in the US, then you do the contract in dollars. The only problem is those contracts are coming due, and you've got a mass scramble to buy dollars because you have to pay a dollar contract back in dollars. So that's the reason for the dollar outperforming other currencies in the USDX. As for the ruble, just look at the US versus Russia. The US is what, 130, 140% debt to GDP, and Russia's 14% debt to GDP. So you're looking at a nation that is truly in the old definition, the old true definition, we're a banana republic. Anytime a country got over 100% debt to GDP 20, 30 years ago, they were considered a banana republic. And here we are, the reserve currency of the world, with, call it 140% debt to GDP and no rule of law. I mean, just look around. Look what happened yesterday with raiding Mar-a-Lago. This country has no rule of law. There's two sets of rules, one for them and one for us. So the reason the ruble has strengthened is because their economy is actually stronger on a real basis than the US. They don't have to import everything that they consume. We do. We have no manufacturing left. So, I mean, the whole plan was to try to bankrupt Russia. And of course, it dropped 50% as soon as the invasion started. And then immediately you had buyers, arbitrageurs move in and buy rubles. And I mean, the initial reaction and still in the press up until a week or two ago was, Russia's going to get their ass kicked. But the facts on the ground don't show that at all. I mean, the Russian military looks like a tractor in first gear that doesn't give up 1 inch, thus a stronger currency.
Mm-hmm. Well, and it's interesting that you bring up, in some ways, two sets of rules. As part of the Inflation Reduction Act, they've hired, or they're going to be hiring, something like 87,000 new IRS agents. So is this really just pointing at a bigger threat towards the middle and lower classes of society, just making sure that you pay every cent of tax that you're supposed to be?
It's a threat toward every American that's not plugged into the powers that be. I mean, look at that, 87,000 IRS agents, not one single Border Patrol agent, nothing in healthcare, nothing in the police force. It all went toward IRS agents, who, by the way, the IRS, just a month or 2 months ago, it was discovered that they had purchased 700 million rounds of ammo on top of the trillion plus rounds they already had. So why are they arming the IRS?
It doesn't make a whole lot of sense, considering it's supposed to be a tax agency, right?
Right, but you could come up with some wild scenarios as to why they're being armed. I'm not going to talk about it, but think about it for yourself. Why are they arming the IRS?
Mm-hmm. So, Bill, with the BRICS Plus nations signaling that they will be moving towards a commodity-backed trading currency, why do you think that this hasn't been seen in the West as more of an important development?
Because the media has not reported on it. And people in the United States, and I guess the West, you could look at Canada, you could look at Australia, Europe. People have their own lives to lead, and they've relied on mainstream media. And if mainstream media doesn't report on something, then it's not a problem. Mm-hmm. When in fact it is a problem.
So do you think this ultimately means a much stronger place for gold in the world's financial stage?
It means a much weaker place for Western currencies, because we're moving into a world where we have one set of currencies that are backed by something real, and you have another set of currencies from the West backed by trust us. And I mean, we've done, when I say we, I'm talking about the United States, but it's spilled out to other Western nations. I mean, look at Canada, look at New Zealand, look at Australia, Europe. The United States has been caught in lie after lie. And what I'm getting at here, now I'm talking about COVID. Countries have locked down their citizens and obviously not done, and outright lied to their citizens. And more people are figuring out that they've been lied to. But they're finding out on their own because they were also lied to by the mainstream media. And any dissent on the origins of COVID or vaccines or whatever, it's been censored as hard as they could possibly censor it. But the news has still gotten out, and we're at the point now where, people are having family members drop dead at 20, 30, 40 years old in the middle of sleep, on football fields, taking a jog, taking a walk, whatever. The amount of deaths are up 40%. And people are connecting those dots, even though the mainstream media won't even talk about it. So again, it all goes back to confidence and the fact that the West is outright, in many cases, outright lying. And people can see that with their own eyes. And also the governments are saying, trust us. Again, going back to the BRICS versus you don't have to trust us. You have to trust that a pound of copper is a pound of copper, or a barrel of oil is a barrel of oil, or an ounce of gold is an ounce of gold.
Mm-hmm. Well, when we think about those commodities, since the start of the pandemic and really continuing as we saw the Russia-Ukraine conflict escalate, we've seen these supply chains break and economies all over the world start to deglobalize and try to bring supply and manufacturing onshore. So do you think that this is, for some countries too little too late? And is this trend going to keep fueling inflation as well?
Yeah, of course, it's too little too late. And as far as fueling inflation, yes, it is a mathematical calculation where you look at growth in money supply versus outstanding product. But emotion also comes into it. When people start to anticipate inflation, they want to get out of their currency. So it's a bank run on a huge scale where somebody's trying to get out of their currency and into something real. And as far as the supply chains, yeah, it's far too little too late in many instances. And I mean, how late is it for the United States? We've been shipping our manufacturing out of the country for over 30 years. Go back to Ross Perot in 1992, talking about the giant sucking sound from NAFTA. He was 100% correct on that. And, he was called and considered a lunatic, but he was spot on.
So, Bill, since the last time we spoke in January, what is your opinion of sentiment within the metals market so far this year? Are people's attitudes, reversed to the price going down versus what it should be?
Yeah, I think the sentiment is poor. People, I get emails every day, when is gold going to move? When is silver going to move? The only thing I can tell you is what has changed for the positive is that the supply has been dried up or drying up. Premiums have gone higher. Here in the States, U.S. coin has gone much, much higher. Gold has gone probably 3% higher than it was. The premium over spot is 3% higher than it was at the beginning of the year. And if you look at Silver Eagles or junk, which I was fortunate enough to have a large order and really clean that market up, those premiums have skyrocketed. And supply, if you try to buy Silver Eagles now, the chances are you're going to be told, yeah, we can get them, but they're 6 weeks out. So the supply situation has changed. At the same time, the sentiment, people have been beaten down with the way they've handled and manipulated the metals markets with selling paper contracts with no metal behind it. They've diluted the paper market for gold and silver and pushed the price down. But in order to get physical metal, in many cases, it's actually higher. But like I said, in my opinion, the sentiment is poor for the people who own metal. The sentiment is poor because a year ago, 2 years ago, people expected gold to explode, as it should have, but it's been held in check with paper contracts. So that's hurt the sentiment of existing holders. You do have better sentiment of people who don't own metal and say, hey, I know something's wrong, or I think something's wrong. I'm not sure what it is, but I don't want to be stuck in a bank if this thing goes down. And their alternative is to move to gold and silver. So we've seen a lot of new customers this year, whereas the existing people are, hemming and hawing and disappointed that gold has not reacted the way it would in a freely and fairly traded market.
Mm-hmm. And of course, those that pay a lot of attention to the silver market would know a little bit more about the big order that you mentioned. And I was just wondering if you could tell us a bit more about that, just from if you got any justification for how that person felt about why they were making a large silver order.
That's plain and simple. She wanted out of the banking system. She wanted that capital out of the banking system. End of story. Because she does not trust that the banking system will be up this coming Monday or any Monday.
Mm-hmm. So again, it's another symptom of that loss of confidence in not only the currency, but the banking system as well, right?
100%.
Excellent, Bill. Well, I think we've touched on a good amount of topics there. Was there anything else that you can think of that you'd like to mention before we wrap up?
Well, yeah, I think what happened yesterday with the sacking, if you will, of Mar-a-Lago, I think that is going to be a defining moment. I think it's also interesting that August 8th was the day that Nixon resigned back in 1973. So it was an anniversary day. And I think this is going to backfire on the powers that be. I think it will divide the nation even further, but galvanize. I think patriots will be galvanized by this. When history books are written in the future, they will look back at yesterday as truly a defining moment.
Yeah, it's crazy to think, it's been brought up so many times on the show that we live in interesting times, and it feels like there's just a constant supply of new issues, new happenings, but I think you're absolutely right. It's going to be very interesting to look back, maybe 5, 10, 15 years down the road at this time in history to see how these events catalyzed further loss of confidence in the dollar, the banking system, credit, however you want to put that, right?
Yeah, I mean, it affects the mindset. I mean, just for example, I read an article earlier this morning, even Andrew Cuomo came out and said they better have some evidence and they better show what the evidence is. Otherwise, what they've done is galvanized people against the left. It gives people who believe that the election was stolen, that this lie and that lie, it just gives people more strength in their belief that they're right. And I believe they are right. But when all is said and done, it does break confidence. So many people have come out and said, this is like Banana Republic stuff. Now, if you're a Brazilian and you keep money in the United States, or you're from Japan, or you're from anywhere, and you keep money in the United States, was what happened yesterday, does that give you more or less confidence that your money is safe in the United States? And actually, you can go back in the fact that we stole all of Russia's reserves, their paper Forex reserves. Does that give a foreign investor more or less confidence? So, I mean, like you said, we are definitely living in interesting times. I've said before, I question whether there is even going to be an election. Will some type of event come up and they say, no election until this thing's fixed? I don't know. I think the odds are fairly decent that we do not even have an election, that we don't make it to the election in financial markets, that they collapse prior to that.
Mm-hmm. Yeah, it's interesting that you bring up the Russian U.S. holdings. That was exactly where my mind went as well, as you talked about confidence of foreign reserve holders in the U.S. But I guess we'll wait and see how this election comes up, how the midterms in November happen, all of that, right?
Yeah, and here's a question for you. How does China feel about their $3 trillion worth of U.S. treasuries? They got to be questioning whether they can even use that capital or if the U.S. is just going to cancel the debt.
Yeah. Well, and, considering the long-term nature of China's strategies, it seems like there's no way that they're not thinking about that and not trying to plan out the best way to, let's say, exit that position. But it seems like that could start to be somewhat of a waterfall event, because if you see China starting to bleed off those holdings, other countries are going to want to get rid of those positions as well. And when you see, the signal of that event starting, I would think that would happen and start to unravel quite quickly. What do you think about that?
China thought about this at least 20 years ago when they started accumulating gold. Because gold, I talked about earlier, is the anti-dollar.
Mm-hmm.
It's a real money replacing fake money. And as far as China's reserves, they've already started bleeding them off. I think they're right at or just under 3 trillion, and they were at the peak as high as 3.3 trillion. So they've already bled off 300 billion. And what stops them from pushing a button and saying, sell it all?
Mm-hmm.
How would the Federal Reserve, would they just create 3 trillion and buy it? Well, what would that show the world? They were a paper tiger.
Mm-hmm. Yeah, it seems crazy to think that they would in some ways let China just do that. You would think,
how could they stop them?
Well,
this is a financial war. How do you stop someone who owns something that you owe them? How do you stop them from selling it? Are there really sanctions that we can put on China to stop them from selling the treasuries that they paid for originally and have owned for many years? There's absolutely zero way legally for the United States to say, oh no, you can't sell it. It's more likely the United States would say, guess what? We're canceling it out. You can sell it all you want, but it's not worth anything because we canceled it.
Mm-hmm.
Unilaterally. And don't put that past something, powers that are currently in charge would come up with something like that.
Well, that's exactly what I was thinking. Just because it's not legal doesn't mean that they can't figure out a way around that.
Right. But Tom, okay, so you're talking about 3 trillion in reserves. My guess is they have at least 25,000 tons of gold. Mm-hmm. And you'd have gold, pick a number, 100,000 an ounce, 1 million an ounce, 100 million an ounce, 1 billion an ounce. I have no idea. All I know is the opposite of zero is infinity. And the dollar is ultimately going to zero. So in dollar terms, gold is going, a cup of coffee is going to infinity.
Mm-hmm.
And the Chinese know this. If you know this and I know this, trust me, they got smarter people than you and I. They know this.
Mm-hmm.
And they've been preparing for this for at least, they've been preparing for it since 1971 when we went off the gold standard. And Mao's comment was, we now have the collapse of the US dollar in sight. And he said that on August 15th, 1971. Mm-hmm. So that's 51 years ago.
Mm-hmm.
So all I'm getting at is China definitely has planned for this and is planning for this.
Mm-hmm. And as your partner, Jim Sinclair, has said many times, this charade in some ways has carried on a lot longer than anybody could have expected.
Oh, absolutely. What I missed in 2007, 2008, and I did see that coming, moved my family out of the country just months before Bear Stearns first announced in 2007. What I missed was that central banks across the world and sovereign treasuries across the world would literally bankrupt themselves trying to save the current system. And that's what they've done.
Mm-hmm.
Just look at their balance sheets. Look at the balance sheets of sovereign treasuries. Look at the balance sheet of the U.S. We're deep into Banana Republic territory. Look at the balance sheet of the Federal Reserve. They went from, 700, 800 billion to 9 trillion. They went tenfold in 12, 14 years. And they had to do that because with any Ponzi scheme, you have to have new money coming in. And once new money stops, the Ponzi scheme collapses. So the way to keep the Western financial monetary Ponzi scheme afloat was they had to expand their balance sheets. There had to be more capital coming into the system, and that capital was created by central banks and borrowed by sovereign treasuries.
Mm-hmm.
And this is now the end game because there's nothing left to borrow against. All the collateral has been borrowed against once, twice, 100, 200, 300 times in the case of gold and silver.
Exactly. All right, Bill. Well, I think that's a good place to wrap up for today. Of course, you do a lot of writing over at jsmineset.com. Anywhere else you'd like to point to?
Yeah, I am partner at JSMineset. We have a public side, a private side. We do a weekly 1-hour call for subscribers. We have a couple people, including myself, that write on a subscription side. And I do clear my gold and silver brokerage business through Miles Franklin.
Excellent. Thanks so much for your time today, Bill.
Thanks for having me, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.